that debt spiral that's happening right now, your credit card limits increasing, all that's happening because the value of the currency is going down. That's why gold is going up. Other fiats compared to other fiats is a really poor example of purchasing power of a currency. It's who will take what against gold. I still firmly believe that. I think if we keep going this way, 3,700 by the end of the year is very achievable, if not higher. I still think $5,000 gold in the next 2 years is attainable.
Gold hit a new all-time high on Friday, the 8th of August. We're going to talk about why and what's next with Morgan Lekstrom, CEO of NexMetals Mining. Morgan, welcome back.
Thanks for having me again. Lots of fun this time.
You were on the show not too long ago. Revisit the last interview in the link down below. You were calling for higher gold prices. In fact, you said $5,000 could be the target this cycle. And just today, as tariff news came in, $3,500 was reached. U.S. gold futures hit all-time highs on tariff uncertainty over bullion imports. December gold futures rose 1.2% to $34.94 after hitting a record $35.34 earlier in the session. Spot prices eased and remained on track for a weekly gain. Now, gold's panic ascent shows that even safe haven assets are not immune to the volatility unleashed in the confusion of the tariff age. And specifically what happened was there were duties placed on U.S. imports of bullion bars. So I'll stop there. Morgan, I'll get your reaction to today's move. And I just wonder whether or not this is just going to be a short-lived move like we saw with copper. And we can talk about copper later on in the interview. When tariffs were removed from copper, we saw what happened. The price went down 22% in one day. So I wonder how much of this was just artificial or if this is a fundamentally baked move. We'll see.
Well, I think just to touch on copper for a second, it was actually when the tariffs were put into copper at 50%, it went down 25%. So it went from plus $5 to 440, 430, but that's when he actually tariffed copper. So the interesting thing is it's definitely an inverse correlation on gold, and fundamentally for two reasons. I mean, gold is a real reserve currency, right? So the minute he tariffs gold, tariffs, other items, you're starting to devalue the purchasing power of the US dollar. So that's more the de-dollarization nature of it all. I mean, from my understanding, it only tariffed gold, 1 kilo gold bars coming out of Switzerland. So, okay, that's not great for the Swiss people and then there, but it just actually keeps more gold in Switzerland. So the fundamentals of that tariff actually didn't make sense to me. It's like you're going to tariff gold coming out of Switzerland, so they just keep the gold. So you're actually bringing less gold into the United States of where you want it to be. So I get it. Look, I think the last meeting we had, I was calling for $3,500 gold by the end of summer. And I think we said there may be a slight pullback into the 31 range, 32 range, and then I think it's going to go up. Something's going to happen. Well, something happened. So look, gold, the fundamentals of gold are still strong. You've seen what happened when the Iran-Israel crisis happened and it got resolved. Gold dropped 1.5%. So that's how very little is baked into gold from a volatility standpoint overall to world events. Tariffs, yes. Less so on the world event scale, more so on the de-dollarization of the U.S. and its purchasing power.
Okay, $3,500 is reached. Let's just get straight to your outlook then. What's next? We've reached your target. Are we poised for a pullback, or is this more consolidation now?
I would say watch next week. Next week is going to be a critical time to see how the markets shake out. On any rise up in futures, you always see a fall for a little bit. So we'll see where that fulcrum is. I don't necessarily see the equities reacting right away other than the producers, which they have. I mean, look at Agnico Eagle. It hit, I don't know, $189 today. It's insane. It's going wild. There are all the producers out there. Aris Mining, huge example of an undervalued producer that is spitting out cash flow and on its way to 500,000 ounces a year. Very undervalued compared to its peers that are another 500,000 ounce producer. But again, everything's starting to move up. On the producer side. The next side of this will be the developers. What's next with gold? I'd say either you're going to get a rapid move up into September, October, and then a cooling in November, or you're going to stay cool here and then get a rapid rise up into November. So it's only one or two. It depends on what the U.S. government does next, what Trump does next with his tariffs, but also how you see projects coming online, what you see with the gold the consolidation in the gold space, I think this type of gold price will lead to a very quick consolidation of anything near term.
I wonder if this has any impact on consumer products of gold, so bullions, bars, and bullion products. How much of that is refined in the U.S. versus abroad?
Switzerland.
Yeah, that's what I was getting at. There's a 39% tariff on Swiss imports right now. They're negotiating that. The Swiss are not happy about that. The president, I think, personally flew in, if I'm not mistaken. Anyway, what's your remark there?
Look, you're making it more expensive. You are making it more expensive fundamentally for U.S. consumers to buy gold, because anything in the 1 kilo bar range, I mean, hey, if you're buying a kilo bar, you're doing pretty good, but you're making it more expensive. So I go back to what you look at when you're making these decisions, and I look at you're devaluing the purchasing power of the U.S. He's doing it on purpose. Like, look, he's doing this on purpose because he needs the Fed rate to cut, and he needs to refinance the debt of the U.S. at a much lower rate. That's bar none. The way you do that is you create inflation and you create price pressure through that. The way you do that is you devalue your currency.
Okay, Morgan, copper. What is going on with copper? And we'll wrap up with gold into your company in just a minute. But I want to show you this chart. It's a pretty scary chart. I think you know what chart I'm talking about. And you already mentioned why it dropped. So let's stick to your thesis here. This is what I'm talking about. An artificially baked in price hike following this jump here in early July. Remember how Trump implemented the 50% tariff on copper early July?
He threatened it back then, and then he implemented it, and it dropped. The way he implemented it killed the price, yes.
Okay. And then this happened also because arbitrage between the COMEX and LME collapsed following the announcement. So we're looking at the U.S. COMEX price right now. Yeah. Can we just walk over the fundamentals? Walk through the fundamentals of copper here, and whether or not this is a buying opportunity for speculators right now, or maybe this is the fair value of copper right now at $450.
Yeah, it's actually two things. I mean, if you look back into February where it really started its run, it kind of dipped in April and started going back up. This was all the tariff rumors coming around on copper anyways. So you had people going out and onshoring as much copper as possible to the US, creating price inflection. But the reason they're doing it is the fundamentals of copper are strong long term, right? The electrical infrastructure of the entire planet, basically, the past 100 years has been unreplaced. You're going to need to replace that. You have we talk about the green transition. I just think it's the transition, no matter what, whether it's green or not, into new devices, new infrastructure that has to use copper. So where the copper price is now and the shortage of new projects coming online, Robert Friedland talks about this all the time. There's a massive shortage of copper projects coming online to meet their requirements. And when you span that out long term, what does it equal? Short-term blips, higher prices, more demand. You would have to cut the demand significantly to drop these prices much more. And the world's the way you cut demand is, you pull a Thanos, you cut the population in half, or you don't. And like the whole, that's a bad joke, but I'm a nerd, so
I get what you mean.
I like it. It's not popular.
I often wonder if doing a Thanos would be inflationary or deflationary. Just think about it. You cut the population in half. I don't know if that's It
would be massively deflationary, right? You wouldn't need as much. All the prices would go wrong. I don't want to think about that. The oceans would be clean again, and Steve Rogers would be Captain America. So perfect. But you really. Fundamentals of the need of the metal are still strong. Short-term price variations like this do create a buying opportunity, but there's still a lot of projects out there that need to come online, and there's volatility in that market. I mean, you've seen copper mines in volatile government environments slow down, shut down for terms. That if you don't have enough supply chain, you will see volatility like this. There's not enough resilience in the copper supply chain right now. Enough so that smelters are out there actively looking to bring in concentrate. They can't stay full.
Yeah. Meanwhile, silver is at $38. I'll just show you this chart. It briefly touched almost $40 last week, and a couple weeks ago, and then now it's back down to 38. Not at new all-time highs like gold. I wonder how much of this move in gold is reflected in the broader commodities complex, and I'm going to show you platinum here. I know you're not a platinum company, but I want to bring this up anyway.
We do.
50%
run in our deposit.
I'm sorry?
We do have platinum in our deposit. Platinum, palladium, cobalt,
there you go.
Copper, and nickel.
There you go. Well, anyway, 53% move in copper over the course of April through July. Yep. And a bit of a pullback here. Hey, what happened with platinum, by the way? We never really talked about this metal, but I think it needs to be brought up.
You know, I will give you my honest opinion on platinum. I don't know what happened.
Okay.
That's the truth. I'm more of a copper, gold, silver bug. But look, it'll come down to the fundamentals of supply demand for platinum as well. It really is a supply demand metric. Some of the Plat Reef's coming online fairly soon, or it's online, and that will help augment some of the platinum and palladium supply. But one of our deposits in NexMetals, our Selkirk deposit, a third of the deposit is platinum and palladium. And hey, when it goes from 840 to 1326, there's some economic advantages to it.
Mm-hmm. I want to show you this quote from Ray Dalio. If incomes fail to grow as quickly as debt and debt service, the ratio of debts to incomes will mechanically grow, which will require increased borrowing to service debt as well as to spend. The cycle goes from low to high to unsustainably high debt and debt service relative to incomes. And then he goes on to plug his book. Okay. This is a quote that I like you to react to. You've talked about the debt cycle before on my show. You've warned us about what could happen, the dangers of unsustainable debt. So I think this echoes what you were saying. Anyway, I'll let you respond to this.
Yeah, absolutely. You create a downward spiral on your currency. I mean, you take too much debt, a debt bubble into your populace. Things become more expensive. You become Venezuela. You know, you literally devalue currency very quickly. Like, one of the countries that has done an absolutely amazing job of pulling out of that was Argentina over lately. They really have. Javier Milei's really cleaned up their currency, really cleaned up down there. But that debt spiral that's happening right now, your credit card limits increasing, all that's happening because the value of the currency is going down. That's why gold is going up. It's not like, well, you know, US dollar compared to other dollars, other fiats compared to other fiats is a really poor example of purchasing power of a currency. It's who will take what against gold. I still firmly believe that.
What happens to gold once this debt spiral begins to unravel?
Straight up, because the purchasing power goes down so much that gold becomes a lever again. It becomes who has the most, where is it, do you have access to it, and it really has a kind of an infinite leverage to it. But the reality is in a debt cycle, they will have to print money, and when they print money, you create more money available. People take more debt. It's a cycle we are trapped in, and to break it, let's roll back the currency like a stock. No, but they have to do something, and I don't know the answer. And like, we talked with Frank Juster a lot about this, and he has a very strong voice on this. I've learned a lot from him about this. But the reality of how we use credit will need to fundamentally change, and how the government levers credit, how banks lever credit. You put $1,000 in, they lend out $908 of it or $900 of it to someone that then lends out this, that then lends out this, and then they recycle it, and you have this kind of never-ending debt bubble going on. It's not just a circle, but it's just this kind of teetering, keep going until there's a massive inflection point in how we use currency and to debt ratios, and how treasury to debt ratios are created. It won't happen. You'll need to rehedge to something. I've said this forever, whether it's real estate, I believe it's gold, oil. You talk about BRICS doing it all the time. BRICS is looking at as hedging to gold and oil. I mean, there are fundamentals of hedging back to gold, and it is a reset. You
This
do
is exactly. I wanted to show my screen because what you're talking about is exactly what another one of Ray's tweets this week. Exactly what he said. The U.S. dollar used to be backed by gold, and it's not far-fetched to think that we may be headed there again in the future. History shows us that the same cycle repeats time and time again. Governments print a lot of money. They pay off the debt with the cheap money. Nobody wants to hold the value currency. Governments go back and link money to gold. Will this pattern happen again? Hard to say, but it wouldn't be anytime soon. It is conceivable.
I don't know. Again, I'm no Ray Dalio, that's for sure. But is it going to happen anytime soon? I think it's based on the kind of sinusoidal movement of how inflation and deflation works. We're compressing time horizons right now. So it used to be long inflationary periods and long deflationary periods where you'd have recessions and you'd have years of pain in the economy, and it would kind of correct itself. Well, the printing of money and the printing of debt has created a position where the inflation to deflation is so quick that you don't have enough time for interest rate hikes and interest rate declines to actually affect this. So what happens is people get so used to that we're going to drop the interest rate. They're like, okay, well, I'm just going to go pull more credit because there's going to be more money available, right? So you're compressing these time horizons and timelines that eventually someone needs to just put a hard stop and go, enough. Okay, we're re-hedging to gold. The currency is now worth $1 is worth X in our currency, and you're going to take the pain. It's going to be some pain for a year or two when that happens. And those who hold dollars will feel it. Those who hold mining stocks and gold probably won't, actually, because the equities will re-rate significantly, especially when you re-hedge to gold. All the gold miners become worth a lot more. That being said, there's still a fundamental issue in the economy, and I know we talk about de-dollarization. It is that we are a consumer-based economy. We are pure consumer. We barely manufacture anything ourselves. Everything is offshored. And when that is the case, you have no fundamentals back to your economy, which means when you re-hedge to gold, you're still a consumer economy. And eventually that cycle will kind of trickle its way back in. So you need to find that counterbalance back into society somehow, or another monetary hedge of some sort.
All right. By the way, I heard $3,700 for gold this year could be the next target. Is that in the cards for you?
I think last time you and I spoke, I said 3,700 for gold this year, didn't I? Was I?
You said 3,500 for the summer, I think, right?
3,500 for the summer, and I said potentially by the end of the year 3,700. And don't quote me, I've had a lot of these conversations lately. I think if we keep going this way, 3,700 by the end of the year is very achievable, if not higher. If we have any major inflection points in the economy or tariffs or any type of natural disaster, it goes up even further. I still think $5,000 gold in the next 2 years is attainable, especially if you're going to re-hedge an economy. Look, there's a lot of interest in the gold space, and gold is becoming more front and center than almost anything else on the planet right now. So I'm excited for it because, well, I'm one of the co-founders of a gold company. That makes me happy. So, but also it is scary as a citizen of the world and the Western world here, linked to the US. It's scary.
All right, let's take a look at your company here. NexMetals Mining. Share prices had a pretty good year to date. We're looking at about a 10% move from the beginning of the year. Let's take a look at some news. Well, first of all, before we get into some recent developments in news, tell us about the company itself. You mentioned that there's multiple metals in your deposit. There's one major project in Botswana. Give us an overview, please.
Two major projects in Botswana, some of the rarest massive sulfide deposits in the world. It's a high-grade copper, nickel, cobalt deposit underground, about $500 million of pre-built infrastructure, underground shafts, everything, all the infrastructure you would need to get the underground into a really strong position. We're showing not only scale there, we're going to show some of the cleanup in the metallurgy. We're drilling. We have a lot of catalysts coming in the very near future out of just our Salibe mine, but our unsung hero, which is Selkirk. So Salibe is known around the world as a very high grade, 30 plus million or 30 million tons currently at over 3% copper equivalent. We believe it expands exponentially. We've been showing that with our drilling results recently, that it is expanding. We are doing metallurgy work there to hopefully create some really neat unlocks with the met. But the unsung hero, Selkirk, is an open pit style deposit. It hasn't really been worked on a lot by the company, but historically, it was over 120 million tons. And when we went and looked at it, we reassayed the core, we found palladium and platinum in it, to the point of the earlier conversation. And by doing that, we actually shrunk the deposit down. Now we are working on expanding the deposit. We're working on all the reassay campaign, expanding the deposit through that, expanding the deposit through metallurgy. So to put it in all layman's terms, or into a term that, if you're not a mining person, to understand this, we have a number of unlocking points coming in these deposits to bring them up to that world-class scale in a very short order. This summer, September, October, November, we are going to have a very, very consistent cadence of news flow that is going to be large. We've already come out with some drill results. Not just large, but large in punch. We're going to get very punchy with this company very shortly.
Okay, speaking of getting punchy shortly, let's take a look at some news, and then you could maybe give us some highlights of some recent developments. There was a increase in, tell us about this headline here. NexMetals achieves an initial 15.2% head grade increase at Salibi North using modern technology, demonstrating high recoveries and significant waste reduction. Here's one news item. Yep.
Absolutely. These are some of the new technologies that we're using on the site. And what that means is as the mining ore comes out of the mine and it goes to the mill, we've increased the grade coming out of the mine by 15.2% into the mill. Why that's important is because we take less waste into the mill and we process at a more efficient rate. So every time you increase head grade, you get more out of it. You process less waste. You need a smaller processing plant to do the same amount on the back end. This is a very important thing. This was just the initial results. We are still in testing, and we believe we can increase these significantly. These can prove to be very, very advantageous to deposits like ours.
Okay. Any new developments with drilling you'd like to tell us about?
Absolutely. I mean, we hit some incredible drill results coming in our Salibi North deposit. That's one of our undergrounds. We hit 13 plus meters of over 4% copper equivalent. We've hit a number of step out holes. 3 holes we've stepped out over 30% of the deposit in the mineralized zone. The real catalysts coming out of the drilling are coming here shortly. From Selkirk and from Salibi, we're drilling the connector zone at Salibi right now, which is what everyone's been waiting for. We are drilling that. We're very actively drilling that. Those drill holes will be hopefully intercepting here very shortly. But the real unlock, I keep pushing this with people and telling them, is the metallurgy. If we can take this project from a bulk concentrate, which is what it's traditionally been, both projects, into a separate concentrate, separate high-grade copper, separate high-grade nickel, you eliminate a huge amount of capex and time to get this back to production. So we are actively working on it. That is an unlock that I'm sure many other companies are watching us on right now around the world. And, I hope to have news on that in the next few weeks.
Okay. What's the next step here for NexMetals, your next milestones for the year that we need to be paying attention to?
Absolutely. It's the metallurgy, the drill results from the hinge at Salibi, all the results coming from Selkirk. We just announced a program at Selkirk as well, using, again, modern geophysics that we've overlaid onto the property. And it looks like there are targets outside of our pit shell area that we're drilling right now. And we think that we can not only expand that, but we're actually taking downhole borehole EM, putting it down those holes similar to the exact treasure map we have at Salibi from borehole EM. We're now implementing that at Selkirk, and we should have a news release on that very soon. Why that's important, again, is that creates a treasure map for us. That creates something to follow. Those borehole EM plates directly associate with high-grade mineralization, and Selkirk has known to have it before. Now we think we'll have a treasure map to find way more of it. That will unlock that entire district.
People say that it's more expensive to mine in West Africa and the operating costs are higher due to a number of reasons. Can you comment on that? Is that true?
Well, we're not in West Africa. We're in Southern Africa, and our operating costs are actually significantly lower. Our drilling costs on surface are very, very cheap compared to almost everywhere else in the world. We own our own drills. We have our own drilling teams. We have some exceptional expat drillers that also come in and help through contractors, but we have a very strong team on the ground. So when you operate in this part of the world, in Botswana, all the infrastructure is already there, power, water, communities around it. I would say, yes, I've worked in West Africa before. You can get more expensive, but generally the African countries are a lot less expensive to operate in than the Western countries.
Okay, perfect. We'll put the link down below so you can follow NexMetals there. Appreciate your time today, Morgan. We'll speak again soon.
As always, a pleasure.
Thank you for watching. Don't forget to like and subscribe.